That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Julie Hyman, as well as Mark Malik, Siebert Financial CIO, and Yahoo Finance's Alec Now join us here to break down the moves today. Let's get it down to Julie Hyman at the New York Stock Exchange for more about where we close. Julie.
Well, it was looking a little iffy there for a while, but the S&P 500 has indeed closed at a new record high, Josh, surpassing the 61.44 that was the previous closing high. So 61.55 is around where we're closing here. Indeed, a record, and recovering after that dip that we saw in the afternoon that seemed to be a double whammy of President Trump saying that there was not a trade deal happening with Canada and that tariffs would remain in place on that, one-time close trading partner, and also some sort of technical effects of a Russell reconstitution here. So a couple of things to watch there. The Nasdaq, we should mention, also closing at a record high here. The Dow still pretty far from that level, which was above 45,000, but all three major averages making it there. As we've been talking a lot about, it is partially momentum here, and a lot of investors and traders, especially as we get to the end of the quarter, perhaps seeing a little performance chasing here, not wanting to end the quarter in the red if they were not positioned to take advantage of the rally that has been happening. From a fundamental basis, yes, tariffs are still hanging over our heads, but investors seem to be looking to the Fed to perhaps rescue prospects before the end of the year, pricing in a couple of rate cuts. Oh, and by the way, yes, we are heading into earnings season. And even though earnings are projected to have the smallest year-over-year increase in 2 years, still, a lot of folks we're talking to are saying they still see those prospects as fairly solid on the earnings front. I think Allie's there has got a deeper look at what's going on in the market.
Hey, Julie, and yeah, if we take a look at the sector action for today, you see consumer discretionary, communication services, and industrials leading us higher. And then we have energy, healthcare, and interesting to see tech as one of the laggards there, especially considering we got that record for the Nasdaq Composite and a few other records this week. But here you're looking at a 5-day, and we are up over 4% there. Now, Monday does mark the end of June, so let's take a look at month to date here. You will see tech at the leaderboard, the top of the leaderboard, I should say, followed by communication services, and then you have real estate, materials, also healthcare as some of your laggards here. But Monday just doesn't mark the end of June. It also caps off the first 6 months of the year. So to that point, let's take a look at a year to date. So year to date sector action, we have industrials leading the way higher there. Healthcare is your biggest laggard, along with consumer discretionary and energy. But this is an interesting chart to look at. If we take a look at year to date for consumer discretionary, this is probably one of the most exposed sectors when it comes to President Trump's tariffs. You see that dip in April after the Liberation Day tariff announcements, and then we bounced off of those lows there. And then same with energy. That's also been an interesting story. When Trump announced those Liberation Day reciprocal tariffs, there were a lot of concerns that we could be entering a recession. So there was demand concerns here for energy that led to this stark drop. And then we saw supply concerns after that Middle East escalation between Israel, Iran. That de-escalation, though, brought oil prices down. And now year to date, we are off about 0.4% here. So I think this paints a good picture when it comes to a lot of those macro headwinds facing stocks, whether it be tensions in the Middle East or what Trump decides to post on Truth Social. Josh, back to you.
Thank you, Allie. Julie, want to get you back in here as well, because I hear you have another data point we should consider.
Yeah, this is coming to us from Julian Emanuel, our pal over at Evercore ISI. Now, remember when we were talking earlier about how strategists on the street are all over the map? Now, his forecast for the end of the year for the S&P 500 is still 5,600, but a lot of his talk about where stocks are going from here is more positive, and so is this chart. He looked back at previous volatility spikes that we have seen historically, and he says usually when you get a spike above 65, extreme volatility spikes, you tend to see stocks perform well in the wake of that, whether you're looking at the 1-month basis all the way out to 12 months, and indeed on the 12 months, that's when you see the largest return following those kinds of spikes. So just an interesting data point to keep in mind here after we have seen some spikes in volatility. That said, he is still looking at some potential stumbling blocks for the market from here. He's talking about elevated valuations, meaning that stocks are, what he says, near-term vulnerable to adverse news on either the economy. We've got a jobs report coming on July 3rd. Remember, the timing's a little unusual because of a holiday-shortened trading week. The tax bill getting through Congress, tariffs, the deadline coming up, even if it is a moving sort of deadline. Or he says, as the Fed showing no bending to the cut rates now chorus when it has its meeting in July. So still a lot of potential things that could come up that could continue to slow the momentum from here. But for now, as we saw today, record close, Josh.
That's right. Julie, thank you. Mark, your thoughts on Julian Emanuel. Listen, Mark, smart guy. We all read Julian's research. What do you make of that data point he was bringing up there, how the market tends to do after you see these extreme volatility spikes?
Yeah, he's right. He's certainly right about that. And we look very carefully at that. In fact, earlier this week, I was looking at, because I wanted to look at it, the Mag 7. The Mag 7, if you look at the implied volatility, the 1 month implied volatility of the Mag 7 ETF, to get an idea of what that looks like. And surprisingly, you would think at this point that the volatility would be through the roof. In fact, the volatility, it spiked earlier in April when everything went down. In fact, if you look at it and you look back quite some time, you see that we're at a low for a long time. So volatility is actually pulled back a little bit, right? So this might be an opportunity for people that were nervous about the volatility. Now, of course, it's not a signal that the market's going to go up, but certainly it's something that people feel, and it might spur a little buying in here. That might explain some of what he was talking about over there. All
right, maybe a bit more buying. Thank you, Mark. For more on the new records and what they mean for investors, let's welcome in now Timothy Chubb, Chief Investment Officer at Girard, at Univest Wealth Division. Tim, it's good to see you. So let's talk about this market. It has come roaring back, Tim. The SPX, S&P 500, hitting a new record close here. I'm sure a lot of viewers, Tim, they're going to see that headline, right, today. They're going to read about it in the papers tomorrow, and they're going to think, well, what do I do now? Do I sit tight? Do I buy? Do I book some profits? What do you think, Tim?
Absolutely, and thanks for having me. Yeah, at the end of the day, I think this is a good time to take some profits. I mean, we have digested so much really since April 2nd, from data to tariffs, ultimately a strong earnings season, everything that you just been going through. But the market is starting to lose some steam. It's kind of been this melt up over the last several weeks. We've seen breadth within the market really start to narrow quite a bit, as you were just discussing with the Magnificent Seven. Really, the AI trade has been, keeping this, rally going. And I wouldn't be surprised as we kind of turn the page into the second half of this year, investors kind of take a step back and again, take some of those profits and look to ultimately, potentially diversify a little bit in the fixed income, especially where, rates are at currently.
Q2 earnings season, with those on deck, Tim, do you think that could that prove to actually be another positive catalyst for the market?
It could be. I mean, earnings revisions were revised down quite a bit. We've started to see that, move in the other direction more recently, but there's still so many cross currents that, may ultimately be impacting some of these companies that removed guidance. I think about 20% of the S&P 500 removed guidance for the year. So the bar might be a little lower than ultimately, needs to be. And perhaps we, jump over it. As Julie mentioned, it's going to be the lowest from a growth rate standpoint in quite some time, but still positive momentum. I think the AI CapEx story and is really a durable investment opportunity for us as well as these companies trying to race and make sure that the rails of the AI railroad are built as quickly as possible.
What did you make, Tim? I'm just curious. We talk about trade and tariffs a lot, of course, as we should. So President Trump comes out today, throwing haymakers at Canada, clearly not happy, right? Making some threats there, saying, listen, new tariffs are on the way. What's interesting, Tim, about that is caught people off guard. The market did react a bit initially, but then you end the day up all green here, right? I mean, every popular average in the green. What does that tell us, Tim, as investors?
I think there's some complacency. I mean, this V-shaped recovery has been so hated, right? Positioning was offsides by a lot of the hedge funds. We've seen that adjust a little bit, but ultimately it's been sort of this classic dual pain trade where we've had a short squeeze higher, and then we've had the narrowing leadership more recently. And ultimately, I think retail is certainly charging this rally quite a bit. But people are just, fear of missing out. And if we do get a pretty solid earnings season here in Q2, maybe some of the tariff impact is not quite, baked in the cake just yet for some of these companies, and a relatively, I'd say, sanguine, outlook for the back half of this year. Markets could continue to grind higher from here. But, I think the key point as to why we're back at all-time highs is that we haven't had trade headlines. And so if we start to see this, as we get closer to, July 9th, ultimately creep back into the headlines quite a bit more. I think the equity markets are vulnerable, sort of price for perfection in a lot of ways. And again, it's just been somewhat fragile, just given the narrowing breadth that we've seen recently.
Sticking with President Trump, Tim, he is not happy with the Fed, not happy with Jay Powell. They're late. They should be cutting, he says. Is he right?
I don't think so. The labor market has softened, and I think ultimately that's going to be driving things. But it remains to be seen how inflation is going to ultimately come through in the data related to these tariffs. I mean, there's been so much conversation about hard data and soft data, and why hasn't it converged just yet? And I think one of the reasons that it may not be is it's really coming at the expense of margins, and that could be from on the supplier side, small and medium-sized businesses. It could be some demand destruction. It's a very complicated equation. We haven't been through, a trade war at this magnitude and scope in really quite some time, or at least having tariffs, 10 percentage points higher than where they were to start the year. And so, ultimately, I think the Fed is right by, being patient, waiting for the data to unfold. I think they'll be quick to respond if we do start to see some more significant deterioration within the labor market, and that'll ultimately override some of the inflation concerns that may come from tariffs down the road.
Tim, always great to see and to have you on the show. Thank you.
Thanks for having me.
Well, American investors cheering new record highs. It's nothing in comparison to the recent run South Korean, Mexican, or even German stocks have been on. Yahoo Finance's Rick Newman has been tracking the moves and joins us now. Rick.
Hey, Josh. Okay, great. We have a new record high in the U.S. market, but we're only up, a little over 5% for the year. Yeehaw, I guess that's okay. If you look at global stocks, not including the United States, so that's all stocks in the world except for the United States, there's the chart, up about 15%. So the gain there has been 3 times what we've seen in the United States. And if you just go through different markets, almost all of them are outperforming the United States. And this is a reflection of what we've been calling this year the so-called Sell America trade. Since 2015, the U.S. stock market has been the place to be. It has trounced foreign stocks for almost all that time, but that's beginning to end for a lot of reasons we've been talking about. We'll continue to talk about too much debt in the United States from the federal government. That's only going to get worse. We've seen some wobbles in the U.S. bond market. That's not over. And investors have been saying maybe it's time to look at some of these foreign shares that have been overlooked for some of this period of time. So great, we have a record high here, but guess what? They have better record highs in many other stock markets around the world.
Switching gears, Rick, in this week's rendition of Trumponomics, you write about dueling Fed chairs. President sets his sights on a replacement for Jay Powell. Where do we stand, Rick, on the latest with Trump versus Powell?
Well, Trump's obviously very frustrated. He can't get the Fed to cut interest rates. He keeps trashing Powell, although Powell is just one of 12 voting members. So this week he floated this idea. Powell's term as chair expires next May, so he's got 11 months to go. But Trump floated this idea that maybe he would announce or nominate Powell's replacement soon, so that you would sort of have somebody, I guess, sort of playing understudy to Powell, or maybe dogging Powell, or maybe saying, well, Powell's a chair now, but when I take over, here's what I'm going to do. I mean, on one hand, CEOs, public companies do succession planning, and their shareholders want them to do that. We want to know who's going to replace key executives. So it's not a crazy idea in that regard, except that, Trump doesn't want continuity and a smooth transition at the Fed. He wants regime change at the Fed. So what would this shadow chair do? Would, every time Powell gives testimony or holds a press conference, is the shadow chair going to have his own press conference and say, well, I'm going to tell you all the reasons Powell is wrong? Are markets going to start getting, two messages on monetary policy, one from the current Fed chair and one from the future Fed chair? Maybe this idea is going nowhere, but if this actually materializes, it's just going to cause unnecessary confusion.
And it sounds like the next Trumponomics column, which we will have you back on to discuss at that point. Rick, thank you, my friend. Have a great weekend.
Bye.
Stick around. Much more market domination overtime still to come. 2025 is shaping up to be a booming year for crypto as regulatory tailwinds and forecasts of mass adoption send Bitcoin and stablecoin related companies higher. We're joined now by senior markets reporter Nez Far with an important recap on digital assets. Hello, Nez.
Hey, Josh. Yeah, and if we just take a look at where Bitcoin is at, year to date, it's up 13% since President Trump won the White House last year, though it is up roughly 50%. So you really see the boom that has happened in the Bitcoin space, given President Trump's promises for a crypto-friendly framework. So you've had a lot of regulatory tailwinds this past half year. You've had also the executive order that President Trump signed to start a strategic Bitcoin reserve. And you've had companies that have really benefited from this. I'm going to pull up a year-to-date chart so you can see the biggest beneficiaries. Robinhood up 122%, the trading platform. Also, you've got Coinbase that is up more than 40%. I do want to mention that even though today we saw Coinbase pulling back from its record close, this stock has seen a turnaround that is impressive. You've had this stock that was at its lows in 2022. It has emerged from those lows up more than 900% since then. And you've had a lot of bullish calls around Coinbase, with one analyst earlier this week calling this company the Amazon of crypto financial services. Also want to mention that Coinbase is a minority stakeholder of Circle. This is the company that went public earlier in June, on June 5th, and Circle is up year to date, well, since its IPO, almost 500%, 480%. This is the issuer of stablecoins, and the stablecoins are digital tokens that are backed by assets like the US dollar. And Wall Street is very bullish on this entire stablecoin market because they are seeing a large addressable market. They are saying that this is going to revolutionize the way that payments are made, especially when it comes to cross-border payments. And we've seen a lot of deal making in this space as well. We've seen companies that have wanted to get involved in the stablecoin space. And it's interesting because issuers of stablecoin, you've got Circle and then you've got Tether, which is privately owned, that as far as Circle is concerned, it is a pure play when it comes to stablecoins, and they're a big buyer of short-term debt, U.S. Treasuries. So this is a very important link between the government and also these issuers of stablecoin, because they also drive some of this demand for U.S. Treasury bills short-term.
And as, before I let you go, what can you tell us just quickly about the risks that we should think about associated with adopting stablecoins?
Yeah, I mean, you've had a couple of analysts that have talked about these risks you've got increasing competition on the heels of the Genius Act that was passed in the Senate. It's expected to be finalized by the end of this year, so it'll pass through the House and also will be signed into law. And so that's expected to go through. But then with that, you're going to have increased competition. And then on top of that, the other risk is that if you have interest rates coming down, then that is going to impact the reserve income that a company like Circle makes, because it invests those dollars into U.S. Treasuries for its stablecoins. So that'll have some type of an impact. Some analysts that I've spoken to say that this means that they're going to have to gain more market share, grow faster, and perhaps go into other products as well.
Thank you, Inez. Appreciate it.
Thank you.
Mark, quick question on all things crypto. It was interesting. I had a conversation with Mike Novogratz from Galaxy on the show. And Novogratz said something interesting about crypto. He said, listen, if I thought that the U.S. government would get its fiscal house in order, if I thought that they would bend that debt to GDP ratio in a way that wasn't quite so scary. The case for crypto, he said, would be less compelling. Novogratz doesn't believe that's going to happen, so he stays long and strong crypto. What do you generally make of that argument, Mark?
Yeah, it's so hard to be so broad about crypto and this whole market, because every type of coin that we're talking about today has a different feature about it, right? There are stable coins that they have their specific features and they have their potential benefits, certainly in transactions, which is why Wall Street is so interested in using stable coins. But there are also risks, as Ines was talking about. But then you have you have Bitcoin, the mother of all crypto, and we still don't really know how to value that, but it's certainly being used by the market, and people were speculating to sort of as a proxy for what Novogratz brought up to you. So, is that a way for people to vote and put their sort of message out there to the government, get your fiscal house in order? But the question is, if you do decide to go all to crypto because you don't think the government has their fiscal house in order, how will that crypto protect you from, a downside situation? Right? It's still a very speculative thing at the end of the day. So, of course, we look at it very closely. And, of course, we have to have some exposure to that stuff. We have to be really clear about what all these different types of tokens actually do, what their benefits are, and what their risks are. They're different across the board.
Julie, your thoughts?
Well, I think that the framing around crypto has changed to some extent. The question that at least I was posing to a lot of our crypto investor guests at one point was, how much of the interest in crypto, whether we're talking about Bitcoin, some of the other coins, even something like a Circle is, how much of the investment and interest in it is buying a lottery ticket, right? Is buying something because the price is going up. That calculus, I think, has changed to some degree because the regulatory environment has changed, because there has finally been more institutional adoption with that regulatory change that the industry has long been pushing for and has been waiting for. But you gotta figure, Josh and Mark, that there is still at least some level of ownership and entrance into this market at whatever level it is and with whatever token it is, who are still getting into it because they see it as a lottery ticket, even with something like a stable coin, which is an established business, because there are still so many unknowns about what its place is going to be in the financial system. And so at some level, it's a bet on the possibility that it could be a large one.
All right, thank you, Julie. Appreciate it. And a big thanks, of course, to Mark Malik for hanging with me today. Any final thoughts, Mark, as we head into the weekend, of course, the second half of the year? I know you're still constructive on this market. Yeah, look, a close at an all-time high is never a bad thing, right? And that's where we were today. We saw the market turn around in the afternoon. We were already coming up with worst-case scenarios, and by the end of the day, I'm pretty sure, the green all over the place. They were paying attention to us. We highlighted the buying opportunity, and they came in. Look, the momentum is still very positive. That could change. There are a lot of potential roadblocks, as we discussed, but there are a lot of potential opportunities still out there. The things that we liked 2 quarters ago, 3 quarters ago, are playing out right now. We'll see an earnings season, but right now, we'll take this all-time high close. Right into the weekend. Mark, thank you so much today. Thank you. Appreciate it. That is going to do it for today's Market Domination Overtime. Be sure to come back Monday at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Ask for a Trend. Got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.